Hey everybody, welcome to another episode of Thought Leaders. I'm your host Chris Shang, and today we have Khalil, who is the Chief Product Officer at Caary Capital. Thank you so much for joining us.
Yeah, thanks a lot, Chris. Happy to be here, and thanks again for inviting me for the podcast.
Of course, tell us a little bit. I know you gave me a quick explanation just before this, but tell us a little bit about what Caary Capital is today. What are you guys building? What are you guys doing? What kind of companies do you guys work with?
Absolutely. So, Chris, we started Caary Capital about 4 years back. So, I was the first founding member, the first employee, the first of everything. So, I built this company literally from the house that I'm sitting here right now, from the basement of this house. Built up to like 75 to 100 employees, and continue to. So, the idea was that we would have our own brand, which is Caary Capital. So, it would be a Caary branded card what would be in the market, and we started really well with that. Like we were seeing double digit growth, acquiring the customers and growing the business, thousands of cards issues, millions of transactions happening. But then the market turned, as you know, with Silicon Valley Bank, and then the cost of capital went through the roof. And of course, the delinquencies were about to hit us. So the board made an informed decision. Of course, I was part of that decision making, and we said that instead of us trying to become a bank, and start to worrying about the balance sheet and all the bells and whistles that comes with a bank like AML, FinTrack, compliance, risk management. Like our core competency is we are a tech company. I've been in tech for many years. I have a payments background. So why don't we pivot to a SaaS platform? That's what we are building right now. So previously, before this pivot, our customers were for small businesses, but going forward, our customers are going to be banks, credit unions, telcos, big retail chains, like anyone who has got small business as customers, and they want to deepen their relationship with their customers and also get insights of where their customers are spending. We come in play. We have built something which is really meaningful, top of the line, like all the bells and whistles, like no Canadian banks at least can come close to our functionality. So everything is ready to go. And right now, the build which is happening is we are creating a multi-tenant environment because there's a huge interest in US right now. So we are thinking about going to US. Well, we have to go to US because it's just the interest is enormous there. So we are creating a multi-tenant of the same product, do those integrations, and start onboarding customers hopefully in the next few months.
Got it. Very cool. I want definitely talk about what that process of that pivot looked like, how you guys made the decision and the whole nine, because I think that's a very interesting topic to dive into. But before we do that, love to kind of get an understanding about your background. Saw that you started off doing like a lot of project management and then working your way up the ladder from there. But how did you figure out that this was a side of product that you were interested in?
Yeah.
When did that happen? And how did you kind of come across as becoming like this is the path of my career that I'm choosing?
No, no, no. That's great, Chris. And funny enough, sometimes you don't make a decision; God makes a decision for you. Circumstances come into play. But I'll just a little bit of background about myself. So I started my career with Oracle with SAP. So I was a pre-sales consultant. Then I became a technologist, DBA. So I did my full stint, front-end development, back-end development. Then I became a pre-sales consultant, and then a consultant, functional consultant with SAP and Oracle Financials. And right after that, I did my first startup back in like 2000. It was Crowsoft, very futuristic Crow. So I used to do a lot of websites and some small accounting software. And then, of course, I moved to Canada, and things became a bit different. Like you start from kind of very start, and I did. And then, fortunately, I was working with Manulife, Scotiabank, CIBC, and as you can see with my profile, very high level, like 50 million, $100 million projects with him. So one thing I realized, Chris, during all of those roles, that when I'm launching any product, any big product which is worth like $50 million, I'm talking to 50 product managers because how big banks are, they're just too big. And the problem is that each product manager is looking at a silo and making sure that his interests are protected, which might not be aligned to the organization interest or not. And how can he add value to it? And as a program director, overseeing all of those work streams, I saw a huge and this is what my role was like, to make sure that it doesn't matter if you're envelope gets delivered. Doesn't matter if your credit card gets delivered. It doesn't matter if your distribution is delivered. It doesn't matter. The whole thing has to be delivered for all of it to work, right? So I'm thinking, wait a minute, like, and then people are like, so like these are big banks. They are not dedicated on a product or on a project. So they are so thin. So I would roll up my sleeve and start doing a lot of product stuff. I'll start doing the P&L. I say, don't worry about it. Let me do the business operating model for you. Let me do all and talking to all the BAs and all the back office people and operations people and IVR people and call center. Let me figure everything out for you. Just please sign off on it. So I'm like, so I did that for many years, and then I realized, I'm like, wait a minute, it's not project management. Project management is that you're looking at just risk, um, and really like putting people accountable. In this case, I'm the person accountable and understanding everything. And then, fortunate enough in my career, I went for CIBC, Scotiabank, Bank of Montreal, Scotiabank again, Meridian. I came to a realization that I think I'm ready. And then I met with my current founder and my partner, Jason Sawyer. And he said, hey, are you interested in launching a credit card business? And it happened in Colombia in a mountain, funny enough. And then he said, do you want to launch it? And I said, yeah, maybe. And then one thing led to another, and we launched this product. So it's just to answer to your question, I think over time, technology, project management, and product management, they're honestly the same things. You need to understand all of three verticals in depth for you to deliver anything in value. I've seen a lot of really, really good product managers, but if you give them something, it will take them 10 years and there's still an iteration coming in, right? Whereas you need to understand P&L, you need to make sure that you start making money straight up. Product managers coming from the big banks, fortunately for them, they have got millions and millions of dollars and they can sustain it. For a startup, I need to make money immediately, and this is one of the lessons that I'm going to talk about in our conversation right now.
Yeah. Um, 100% agree, right? So like you have like these super large organizations that have a lot of capital at their disposal, resources, and then switching to startup where it's like, whatever the first rollout is, you're gonna need to make sure that you can capitalize on it somehow because that's gonna be funding the next development milestone for the most
Yeah,
part, right? So
yeah.
um, yeah, I'm curious as to like somebody who's kind of gone through both of those experiences is kind of like that extreme of this of the spectrum. Um, how do you feel, like uh well, how do you feel like some of the operating inefficiencies are within the larger organizations? Is it important for them to, is it important for them to consolidate some of those inefficiencies, and how do they go about that if you're a larger organization? Obviously, I think a lot of it tends to happen where it's like more reactive, where they might roll out a project and they see that, and again, it's not like doing this iterative cycle. They might be rolling out like a $15 million project after they've spent the full $15 million and then see that, it's not being engaged or not being, having the usability that they were initially seeking. And that could be for a plethora of reasons, right? In terms of like, so I'm curious as to how you think about that. If there's a better way to probably approach it, are you seeing, different initiatives that are making that more conscientious, especially as we mentioned just now,
Yeah.
like cost of capital is much more expensive. People are more diligent, I think, around ROI and how things relate to their P&L.
Yeah, no, so that's interesting. Like it's a great question, but honestly, in my opinion, unfortunately or fortunately, there is no way out for small like those big banks. And the reason is that the banks that I've worked with in Canada, they're like substantially huge bank, $1 trillion of cap rate or whatever you want to call them. They have over time acquired so many companies. Their technologies are different.
Yep.
I used to be head of delivery for data warehousing at Scotiabank. So with my one of my really good friend Neil Frake, who is now the CIO. He was CIO of Manulife, now is CIO of a bank called Sagicor. Like great guy, and basically what we did was that we saw all those. Neil saw all those inefficiencies, and he said, "Wait a minute, why can't we build a data warehousing team and a BI team within the line of businesses?" And trust me, like he and my another friend Shahid Iqbal was also one of the directors there. we had to fight like so many battles working with technology because we were seeing all those inefficiencies. They've acquired a bank there, acquired a bank in Jamaica, then acquired a bank here, and all those systems are distributed and the data format, some is in COBOL. I was launching a product, an HR portal for Scotia Bank in one of the small islands, and nothing was working out. And finally, one of the guys said, "What version of Windows are you on?" And it was like Windows 95. I'm like, "Oh my God, no wonder nothing is working." So stuff, and again, it's not technology's fault. It's just that business needs to grow. They need to go and acquire. They need to find a good businesses, meaningful businesses which are in profit to acquire them, and then the stuff is thrown on IT to solve for it. And that will continue to go on, unfortunately, right? This is what the world that we live in. Now, for the big banks, the inefficiencies, and that is why the inefficiencies are there. If you ask me, okay, so to launch a product, Khurram, in this market, like I'm talking to some guys in Africa, to launch a product in Africa, do an analysis, high level PNN analysis, and do a business case. I'll do a business case in 10 days. Now, you go and talk to the same thing with CIBCs of this world or any of the big banks, they're going to say, yeah, 2 years, right? And to understand all and the impact to all the line of businesses and resource allocations and technology estimates, just because they are so big, right? So here is what I always recommend, like if I were a big bank now, and I've been on both sides, that is why those acquisition plays are very important. Like at some point in time, and we have talked to many banks in Canada, and we are still talking to some banks, like that is why companies like Caary are so meaningful. Like you don't have to give me $50 million or $30 million. Give me 5 mil. Give me whatever you got. This is like when I used to manage budgets. I wish I came across my own company. I would have given 5 million in heartbeat because I know there's just so much capital sitting there. So investing in those small startups, utilizing their technology to get to that next level of market is super important. And over time, that acquisition might become a problem to integrate with your core systems. But if they start funding some of the startups, one of my friends, actually, she is head of strategy for fintech for Wells Fargo, Jazz, a lovely person, very insightful. And she meets with like thousands of startups to acquire into Wells Fargo and other companies, and that's and she sees it all the time. But again, American being Americans, like they are very aggressive. If they like something, they're gonna buy it. They're not gonna spend like 5 years evaluating it. And one of the lessons learned in the sales cycle is you start pitching to a bank, Chris. After a year, their DevOps is now a year has passed and we have gone through every deal. Everyone is loving us. That's a great product. And I said, okay, sign the deal, and then we find out there's a reorg and the person in charge has left.
Yeah.
Now the new guy comes in and says, I don't know about Caary Capital. And then the whole cycle starts again. Whereas in US, I'm finding out if they like you, within 2 months, they'll make a decision. They give you whatever is required and move on with it. I think this is something that in terms of gapping those inefficiencies would help if they are more aggressive. Everything in Canada is unfortunately big five. So big five banks, big five telcos, big three retail, big three this. So a little bit of complacency there. There's no real need to be aggressive. Whereas in US, I'm finding out that those people are very aggressive. They want to grow and grow fast, right?
Yeah.
I don't know whether I was able to answer your question the right way, but that's just a blah to answer some of your questions.
No, that makes a ton of sense. I mean, I feel like, it was somewhat of a loaded question, but I think that makes sense where it's like it's hard for a super large company, especially in like a slower market, uh, to do it any differently. It's almost like the size works against them. The growth of where they've gotten to works against them, right? It's not like they are in a position where they can throw out, some version of MVP because it's the reaction to it from a large customer base, you have really like a minimal amount of time to make
Yeah.
that first impression. So like it's different than a startup where you can burn through a few users and through a few cohorts before you have to like really settle down on what the UX and the design and the whole workflow looks like. And you can go
Uh,
through the iterative process. So that makes a lot of sense, and I appreciate you sharing a little bit more insights around how banks could potentially, well, especially in Canada, could think about leveraging up roll-up strategies and acquisitions as a way for them to, branch into new technologies, new projects, as opposed to doing internally. That
Yeah.
was very helpful. Going back to some of the stuff that you're just talking about, though, like now switching gears in the mindset of more towards a startup mindset of, you
Mhm.
being now at Caary, and I kind of want to dive into like this pivot that you guys recently did, but what was the thesis going into Caary in the beginning when you first started helping to, as the first hire, first employee of building out the product? What was that thesis? And then walk us through the journey of like, you had kind of briefly mentioned it to me right before we got onto the call, but like, what was that process of like understanding that the unit economics didn't necessarily make sense,
Yeah.
margins too tight, cost of acquisition was too high? What were those epiphanies um, that then led you guys to make this decision to make the pivot? And then what's the new thesis?
Yeah, no, absolutely, Chris. Let me just, and it's just going down memory lanes again. And I like doing that because that keeps you honest what you're doing right now. And then going forward, you don't make those mistakes. So when we started Caary, like, as I said, started from this house, hired a fourth set of team. Initial on that we realized earlier on during our seed, during our seed funding or pre-seed funding or whatever you want to call it, that the market was all time high at that point. It was right at the start of COVID, and then the COVID hit, and then so we can't have co-location at all. Like we were all sitting in someone's house and my house and this house and trying to figure this out, and it becomes very hard. And then I also realized that with COVID happening, the cost to hire tech resources was extremely high in Canada because COVID happened, everything went digital, all the branches closed down. So now those tech resources who are trying to find a job, they're all employed. And like I remember like talking to some of the guys to hire as a CTO. Oh my God, everything is like $300,000, and I'm like, guys, like you're still the same person that I was paying $150,000. I've been in this business for so long enough. I know everyone's salary. But then you start and you said, okay, so you make a conscious decision to go offshore. That has its own challenges. But one of the things, Chris, I would mention it from day one, um, if I were to redo this again, never hire your friends in a startup ever, right? And then when you do hire someone that you know or a friend or a family member, make sure that the lines are very clear that they report to a founder, right? And I think that is one of the biggest lessons learned that I have, that the moment you have those blurry lines and they don't know who the boss is, the product goes sideways. But that's just a quick lesson learned. Now let me just talk about how we envisioned the product from day one. So the main use case was that I have a small business that I do consulting sometimes with. I went to went to one of those banks, applied for an application. They took them 2 weeks to get back to me, right? And the limit that they gave me was $2,500. And I said, I've been with your bank for the last like literally 20 years. When I first immigrated to Canada, you're my first bank. So why is it? And then they asked me all kind of banking. Oh my God, like a lot of information. So the first use case was, and I had to go to a branch, funny enough, like twice, not once, twice. And then same thing with the AML as well. There's a guy sitting, a really nice guy. I know him from many years, sitting down, looking at my driver's license and my face. I'm like, dude, I see you like every second week. But again, this is like they are in tuned in a way that they're so risk averse that they cannot even see, hey Chris, are you really Chris? Like, do you want me to take off my like Mission Impossible mask and show that I'm not gonna, I'm someone, like it's not gonna happen. But again, that's the experience I had. So the first thing from the product point of view we looked at is how can we make onboarding frictionless? Again, it's not reinventing a wheel. It's just we looked at just US, and the team looked at it. We hired some external consultants in Canada who have done it before. And if you look at our onboarding, it's like 7 pages, like number seven, takes 7 minutes, right? Simple to onboard. Again, all the integrations, you do the ID verification, KYC, KYB, open banking integration. So that was great. So onboarding sorted out, great. The second product that we built was adjudication of the loans. So a lot of the times, like loan adjudication, it becomes an issue. So we were, I don't know whether we the first one or not in Canada, but I think we are. We were the first financial fintech who were using open banking as part of our adjudication journey. So what it means is that not only that we look at all of the stuff like your registries and your Equifax reports and do the soft polls and all the other stuff, but we also created a synthetic statements like doing P&L, right? So making sure money in, money out, and based on our credit risk policy. I was also the chief risk officer for a little while, and the adjudication team used to report to me as well. So we did that. So at every hop, so think about, so your onboarding is done, your adjudication now, very sophisticated tool. You adjudicate and you approve someone. Once they're approved, then their journey starts with our admin portal. So that's a second part of the product, which is your admin portal, your mobile app. So now you are a card holder, so you can go and issue your own digital cards. You can add them to mobile wallet. You can see all those transactions. You can do receipt captures. You can do merchant controls. So that's another product. And the fourth product that I would say is, Chris, just high level, is your credit card itself, the plastic itself. So making sure that the plastic works everywhere. And the funniest, one of the, like initially on, of course, there were hiccups. But later on, that I remember one of our card holders and an investor, he went to the Qatar game. The one of the Amex card didn't work, but the Caary card worked. So he texted me and he said, "Hey, you know what? Caary card is the card which is working seamlessly. My Amex card isn't working," which was great to know as a product owner. So these are the four products that we initially envisioned, and the whole idea was that every product, it's a P&L on its own. So if I ever were to white label it or resell it, I can do that.
Mm,
So what it means is that if you look at adjudication, like onboarding is onboarding, I can change the UX UI anytime and slap on another bank's logo on it, and journey stays the same. Adjudication, same thing, right? So we are in talks with some of the smaller mortgage companies, some of the smaller loan companies, and we're saying, look, guys, we have built it. So all you have to do is just send us this data points, and I'll do the rest for you. Super fast than you would, right? And plus, it's a scalable model. So the way we build it, that I can have a team in India sitting and adjudicating the loan. Like so, it becomes a 24/7 operations, and it's super cheap as well. And the data stays within a cloud in Canada. So that was the idea, and it worked out really well. We again, as I said, we were growing like double-digit growth month over month. And we signed a deal with MNP, which is one of the biggest accounting firms in Canada. So our cost of acquisition of customers were really low. MNP, I think, is the one of the biggest accounting firms that takes care of all the SMEs. So like I always joke to my risk team that there are only two people there who know more about yourself than you: your doctor and your accountant. So if your referrals are coming from your accountant, so they are also investors in the company. They put in $13 million, not as a corporation, but as individual partners. So each one of their partners put money in there. So that was great for us, because now each partner has thousands of small business customers, and there are about 1,000 partners. All I have to go was go and talk to them and say, "Hey, Mr. Partner, you put money in Caary, so thank you. Can you give us five customers, top five customers?" And my risk becomes zero at that point, because they've been doing their accounting for so long. They are partners in the business, and I would have continued to grow like crazy. The problem became the cost of capital. Like from like 3% wholesale capital, it became 10 to 15%. Plus, no one, the market conditions after SPB turned to the worst. Like no one would give you money just because they don't like their credit risk appetite, and they knew that there'll be delinquencies. And then there were two options, Chris, at that point. One was I continue to wait and say, okay, let me just pause the carry program and continue to pay all of my vendors uh, hundreds and thousands of dollars a month, just to keep the lights on with no revenue, till the market settles down, and then I start getting that. Or the second option was that with heavy heart, let go of all of my customers and say we become a SaaS product, and I rejig all of my relationship with the vendors, and then find a meaningful bank who has big enough customer base and say, I built something, come and use it. I built a house for you, just paint it red and use it. And that's the stage that I'm in right now.
Got it. And so you mentioned, building this and then for a bank to come in and use it. Do you guys have a partner bank in that already that you guys have been in talks with
Yeah,
to?
yeah. So we are working with a few banks in Canada and a few banks in US who are very interested in becoming a BIN sponsor. That's what we call them. So basically, we can use their Schedule A banking license. So they manage all of our compliance reporting. Of course, the data comes from me, and I've got the fifth product that I built is data warehousing in BI and AI capabilities. So it's comprehensive data warehousing with tons of 150 plus reports. Sorry, I forgot to mention that. But yeah, so we are in talks with the banks. Every bank is liking it. I don't know, they were liking it before this recent meltdown yesterday in the stock market. So I still have to go and just knock at the door one more time. But I'm hoping that one of the banks, we are getting very, very, very close. It's not a bank, it's a financial company that wants to launch their own credit card. We have full bank support. We have got balance sheet support now. So all of the other non-technical business issues that we had initially, I've made sure this time they're all been solved for. So when a bank is ready to launch or a FI is ready to launch a card program, all I have to do is work with them, rebrand the product, form the new with the new banking partnership, with the new everything, and then just launch. So for me to launch again, I shouldn't be saying that because if someone's, but it's not years for sure. It's months, and
Got,
it's not double-digit months. It's single-digit maximum, like 5 to 6 months, hopefully.
got it.
Yeah.
Last question here as we round up on time would just be around, you know, you can think about this maybe as it relates back to your product or even more high level than that, in terms of just like the various roles that you've taken on. You mentioned, in today's conversation, a few things around how the macroeconomic environment can ultimately, obviously, like impact a business, that's kind of beyond, ultimately beyond your control. It could be doing well, and then, certain things happen, and it really has a big impact. Um, so how do you look at, the next few years to come? And, what do you, I feel like the landscape is constantly evolving in so quickly in real time, right? You just mentioned another a variable like yesterday's stock market crash, and luckily it's like picked up a little bit back up today, but we're also in like an election year in the United States, and what does that have an impact on some of your US partners and things like that, right? So just curious as to like some of the things that you think about, um, as it relates to your particular business, because there are variables that are within your control, and there's a ton that are not. And so, how do you think about it from your perspective? And what are you thinking about for the next 6 months to a year? And I know you have a lot that's kind of in the short term, but
Yeah.
in the overall scope.
No, no, Chris. I think that's a valid question, and I hope that this podcast goes to a lot of other startup founders as well, and they should also
Yeah.
listen. I think the biggest lessons learned, Chris, is how can you keep your monthly fixed cost at a minimal? How
Mm,
can you survive in this market? Because we are not a big bank, so it's not $1 billion every quarter we see in revenue or profits at all, right? So the money is only going to come initially from my family, my friends, some investors, right? So this is my own money that I put in this business with Jason, who is putting his money in this business. So we are business owners, right? Um, and we need to make money. So I think the biggest lessons learned, what we have seen so far, is making sure that our burn rate is at minimal, and wherever we can utilize an offshore or nearshore model to reduce cost. And also the other biggest thing that we are making sure this time it happens, that we are not dependent on one party, either a either a processor or a banking partner or any one entity as a failure point. Because initially in our eagerness to launch this product, and we are very successful, and again, if the cost of capital would have kept low, we would have continued to go on and probably be profitable by now. But the one thing that I've learned in this business is keeping yourself lean, as if you're running your own house, right? And I'm the kind of guy that I see like a toner selling and staples for at 50% off for my company, I'll be the first one in the line to save that $50 if I can, because this is how you run your business. This is how you run your household. And this is my friends and family's money that I don't want to ever splurge the way it was in the past, right? So I'll make sure of that. That never happens. Number two is again zero, not one dependency, not one failure point. Multiple partners doing multiple sourcing. It can be KYB, KYC, credit stuff, it can be balance sheet, it can be banking sponsor. So this time when I'm re-architecting my product, I'm making sure that everything is seamless, is plug and play. So if I don't like something, I take the plug and re-plug it in a different socket. So I'm making sure this happens. And the third thing that I'm doing is I'm trying to create a very multi-tenant product. And I'm not only looking at Canada right now. I'm looking to create a multi-tenant in US, in Africa, in MENA region, which is Saudi. I was actually in Saudi Arabia, in Riyadh, on a Leap conference. I've talked to like whole bunch of like really really cool people. Tons of money there, of course. So and the business is growing there. Right? It's just the economies there are booming just because the population is less than 25 years of age, and the government is pumping in billions of dollars. And the last region is LATAM. So I'm going to some countries. I'm visiting Guatemala this month. I'm visiting probably Brazil or Colombia as well, and talking to some of the entrepreneurs there. So this time around is like a very global view of the product. So I'm not putting my eggs in Canadian basket, the basket that I love with my heart, but not the basket probably that's going to make me a lot of money, right? So that's the vision, and this is the lessons learned. So any entrepreneur out there who is in the same shoes, and most of us are, unfortunately, ran out of capital because of one reason or a few mistakes. Because we cannot make like the big banks make 10 mistakes and the 11th one, yeah, that works, right? I only have three darts put in and one has to hit, right? So this time around, making sure that we are very risk averse and keeping the capital down. And hopefully this helps other founders as well who are in the same position as I am.
Very cool. On that note, I want to say thank you so much for taking the time today. There's a great amount of information, wealth of knowledge there. Um, yeah, I just want to say that was super intriguing and a lot of great insights.
Thank you very much, Chris. A pleasure talking to you, and let's do it again. Like hopefully in the next 6 months.
Absolutely, for sure.